Hey everybody, welcome to the Closing Beat. Happy day to you. It's Wednesday. I knew that already. Welcome to our show. We're financial advisors here with Jazz Wealth, and we like to teach stuff because we can, right? It's just one of those things. On a day-to-day basis we like to teach, and one of the things we like to do is the show here every day for you guys. Most advisors can't teach you the same stuff because most advisors are more planners or they're more salespeople, and we're actually fund managers as our background here, so we manage our own funds. Hope you'll check that out on our website there. And because of that, I get to share some unique stuff with you here every day, hopefully to get you to learn stuff and keep asking questions about your dough, right? It's very important, I think. And so we'll be covering all that. We'll be talking about the stock markets here today. If it helped you in some way, maybe you'll hit the subscribe button and all that good stuff, and we'll just dive right into it. We're playing a game. It's called Guess the Dow. If you'd like to go to jazzwealth.com/guess the Dow, tell me where you think the Dow's going to close. If you're close without going over, we'll send you a $100 gift card. And also, going to take a little time off next week. Probably just do a closing beat, maybe Monday, maybe not. Just saying. All that stuff I just said about Jazz Wealth, and now we're taking some days off. Holiday week, stock market's going to be pretty quiet. You can actually see the volume dropping off just a little bit already in terms of an average rolling 30-day period. Volume's a little bit weaker, and we'll get that way as the week progresses. And next week, it's going to kind of be a snoozer for the most part, unless there's some kind of shocking news or something that comes out. We'll see what happens. But nonetheless, let's take a look at the stock markets today. We got this basically a little bit of a pullback. We had a really interesting move there in the stock market, so for it to pull back is totally normal. And to start, I wanted to actually share something a little bit different, see if this is something that interests you guys. We're taking a look at some information that came from the Mortgage Bankers Association. Here is the number of loans that were originated, could be new loans or refis. Number of loans originated by credit score. Broke them down there for you. If you had a 780 credit score, you were likely the one who refinanced or bought a new home. Anywhere between 720 and 779, still got 13% there. 2% down here with the lower credit scores, not either refinancing or buying homes. So what that tells you is basically people that are in a better financial position right now are taking advantage of it. Usually those with the higher credit scores, maybe a stable job at the moment. You know, I know there's a lot of trouble out there, but that's what you're seeing from the Mortgage Bankers Association. Also, we saw a slight uptick in those that are getting behind on their mortgages. I know a lot of people have called me. We've talked about the idea of buying foreclosures, and maybe there's going to be an influx in foreclosures. Well, then this is good news for you here. If you look at the blue line here, these are the number of people that went from 30 to 60 days behind on their payments to now 90 days. Although that trend is declining, there's a slight little uptick as we head into the winter. This is for the month of September, by the way. You got a slight downtick in those that were current and became slightly behind, meaning 30 to 60 days behind. So the real pain point at the moment is people that are already behind are just not able to make that next payment and thus far are getting even further behind. So I thought that was kind of interesting to share with you. Something we don't normally talk about, but I look at it, I research it, and I thought, hey, I'm going to put a little chart together and let's see what we can do for you there. Taking a look at the stock market here today, the market was mostly lower overnight. We were already lower. Then Pfizer came out and said, hey, you know, we have a 95% effective rate actually. We said 90. I put it in our notes from Jazz email. We said 90, but we meant 95, which beats Moderna's 94.8 or 94.6 or whatever. So a little bit of a tug of war there. I don't know what's accurate. I'm just reporting to you what happened. But then throughout the day, the New York City school system decided they were going to close down because of the average rolling day period, or average rolling day number of cases over the last 7 days. They're going to start closing as of tomorrow. And so that started to become a concern. You could tell it became a concern, not just because the market sold off, but because you had names like Zoom that started to perk up, right? All of a sudden, these virus-related stocks, Zoom and Netflix, got a little bit of a boost into the day there. Even Peloton, right? A little bit of a boost, 2% higher on the day. And so you've got that weighing on the markets, but helping those virus stocks. Are they starting to bounce back? Would be the question there. Also, you've got stimulus talks resuming in Congress, but they're like this far apart, right? Which is a long way, by the way, in Congress. To be even this far apart is a long way. So you've got Republicans on this side, they want to spend less. Democrats on this side, they want to spend a lot more. Depending on who you side with, you think one side or the other is ridiculous. That part doesn't matter. It's just they're far apart. And so the stock market recognizes that now and says, well, we see the uptick in those becoming late on their mortgages. We see small businesses starting to slow down again. We see the economy starting to slow down. There's no stimulus coming. Stimulus is expiring for the last people there. All of a sudden, you're like, oh boy, you know, this is looking a little bit rough. So because of that, we'll go on over I'm going to start with the NASDAQ here today. The NASDAQ was not the weakest for a change, right? It actually pulled back just a little bit on the day. It continues to see tech selling off, which is the weak spot there. You got names like Apple that pulled back a little bit today, Microsoft, FANG names pulling back, Amazon in the mix. So those tech stocks continue to get sold into rallies there, which is not good. In the NASDAQ there, for now, we have to say the NASDAQ. Tesla had a great day, up 10% again, adding to yesterday's 8% gain. It was the biggest gainer in the NASDAQ and the biggest contributor. And because of that, I get to share some interesting stuff with you. Yesterday, we covered the details of being added to the S&P. That is the news. Tesla is getting added to the S&P on December 21st. That will officially be the 20th change. You want to keep it down over there? That'll be the 20th change for the year for the S&P. Did you know that? So they've already changed 19 other times. They've moved stocks in and out. We've covered all of them throughout the year there. Is that above average or below average? It's actually right on average. 20.7 changes a year is the average change in the S&P over the last 10 years. So we're right basically on par with the changes there. All of the stocks, if you add up all the stocks in the S&P 500, you're going to have 505, but that's because there's different classes of shares like Alphabet and Under Armour. They've got different classes. Anyways, out of all the stocks in the S&P 500, 191 of them are new within the last 10 years. Really kind of interesting. That's about 19 a year, just over 19 a year over the last 10 years. Add in Tesla, that's how you get to your 20. So thought that was rather interesting there, which takes us over to the S&P, because soon we're going to be talking about Tesla in the S&P. Today, healthcare and tech really were the ones that led the decline. Energy as well pulled back on the day. Leaders that were positive on the day were all earnings driven. We'll talk about that in a little bit here. The S&P is still up 12% year to date, just a little bit under at the moment. But this month, this is the interesting thing here. Okay, is this month odd or not? You know how I say that? Like you look at something and you go, well, that's odd. Well, what happens after something odd happens, right? We want to know forward performance, right? So the S&P 500 was and is up about 11% for the month. Take 1% away for today. Up about 11% for the month. Is that odd? It's actually really rare. How do we know that? I can actually show it to you. We're going to go over here and do something fancy for a second. Here is the rolling 1 month returns. In other words, these are the 1 month returns, but we're following day by day. And the reason we're doing that is we want to see in any given month what's the high. In any given month, what's the low? So we're just plotting that. You got your zero line straight across. I know it's a little bit different than what we do, but I'm just trying to be unique here. So you know what I mean? Small company. We're trying to get your attention. Okay, so you got zero right here. So every month we have a high, we have a low. We're just tracking that. All we did is look back 10 years and track every single one of them. The ultimate all-time high came in April, 13.76%. That is the most over the last 10 years that the S&P has been up in a month before doing whatever, falling, or the month just came to an end or whatever. That's it. So we were already up 11%. We were headed towards, and we did hit the second high in the last 10 years, the second most gain that we've had in a 1 month period. And the month's not even over yet. So the fact that this is getting towards the highest level that we could plot on record right here for the moment, over 10 years, has got to tell you that this is an odd rally. And if it pulled back, it'd be totally normal. We're way above average in terms of gains for the month for the S&P. So I thought that was really interesting, just a different way to visualize when I say things. I try to do that for you guys there. What I probably do is go back even further now and say, well, how odd is that, right? Over 20 years, 30 years. Let's go back as far as we can and see how odd that is. That's the bottom line. When you see the markets down here, like we did for the virus decline, or going back here to the end, October, November, December of 2019, late 15, when you look at something like that now and you see it down at the bottom, you now know that that's odd and that's a buying opportunity. That's not a time to be scared, right? Here, we got to recognize that we're getting a little frothy. We maybe just need to take a break. There's always a chance that we go to new highs, of course, and break some record. But what are the odds of breaking a record, huh? You know, do you want to bet on breaking a record, or do you want to bet on things taking a little bit of a break? So that's my extended sort of discussion around that. One other market I'll point out, Bitcoin. People have been interested in Bitcoin. Got a lot of questions on that. Broke 18,000 on a tear lately. Kind of interesting, the ratio between gold and Bitcoin lately. It's becoming more and more expensive. So rather interesting there. I don't talk about Bitcoin much, but thought I'd point that out. FinTips videos this week. On Monday we did, what is the withdrawal rate with $1 million? What could you get away with provided you had other things going going on in your life, so we modeled that perfectly for you. Today, we did a video on what to do if you're forced to retire early. 4 million of you are being forced to retire over the age of 55 because of the virus, right? Not because you want to. So we're covering that today. And then Friday, we're going to do a review of a class we did for customers, stock market performance after the election. How does that work there? So we'll cover that on Friday if you're interested. Going over to the sector breakdown here for the day. We're going to do it fancy today. Come on. Let's be fancy about this. Here you go. So we're going to look at all the sectors. I've got them on our little dojo here plotted out over today, right? So the best performing sector today in the S&P was industrials. The worst was energy. You can see tech still staying down there. It's been consistently pulling back. Not a big deal over the last 5 days. Still positive, but that all came in one day. All in all, you can see the performance throughout the day. We started off just a little bit positive, but we started fading away on that New York news there, the virus sort of scare, stimulus info, all the stuff I talked about earlier. And so that's what you have. If we go over to the industrials real quick, you can see that sell-off at the end of the day there. And we take a look at some of the helpers and herders here in the space. Today, we're going to go over here, do this thing here. You're going to see in this space here, I'm going to sort it like this actually. There was a lot of good stocks in here that did well. Boeing is going to be where you get your attention there. Boeing did okay today. Let's see where it finished actually, because I want to see, did it pull back? It actually went negative. So the big gap up this morning on the news that the FAA is, they said, cool, yeah, you can put the planes back in the air. Then that doesn't mean that the planes go in the air tomorrow. That means that you're certified to fly these planes again. However, the pilots themselves, they got to get certified. So there's a lot of training and stuff still to go there. And so that was all the big excitement initially there, and then it faded by the end of the day as far as Boeing goes. Some of the stronger names today, we're going to be in the airlines. You got Alaska Airlines. If we take a look over here, I'll go to this plot. It's a daily chart so we can see. Great moves here for Alaska Airlines over the last couple days. Not Hawaiian Airlines. Southwest Airlines, they actually finished flat on the day. But if you take a look, that's going to be the cluster of areas there with our little bolder bullet points that did okay, right? They weren't the best area, but one of the more interesting industries I wanted to show you there. I'm going to go over to healthcare here real quick. And if we take a look at healthcare, that one was one of your bigger drags today, right? See that big pullback on the day. You can look over here and see most everything was negative on the day. Your bigger weighted stocks were down on the day. You had Thermo Fisher was really the big drag overall. If I want to pop to that one, it's coming out of a downtrend there. An uptrend and breaking through the 50-day again. So kind of a moment in time, decision time for Thermo Fisher. You guys can see that, right? Yeah, it looks good. Okay. Other than that, most names pulled back today. Looking at United Healthcare, some of the bigger names, they've done well. A lot of these stocks have done well. They just continue to pull back, and you can see that they did so in a group. I love this thing up here. We're about ready to roll it out for customers. I love the changes and everything we've done. But when we look at a stock, we can actually see the grouping up here to verify that it wasn't one stock's problem. If you were to click on something in here and see that only one of their peers were down, that stock had a problem, and maybe those other stocks were down just purely because of that news. Today, this was broad and sort of broad selling across the sector and the major indices, so I'm not really worried about that in general. Lastly, I'll go over to energy here real quick because that's taken a break. It's had a massive run up over 45% in the last 10 days. Hit the 200-day moving average, started to pull back. You can also see the same thing over here, just broad selling. It's profit taking. You had a 45% profit in 10 days. You got to know some people are going to take their profits. The bigger performers, the bigger weighted stocks, Chevron and ExxonMobil, they also pulled back as well. I have no issues with energy pulling back here. Not too bad. This is Chevron actually. If we go over to ExxonMobil, same thing. They've had great runs, everything looking good there. Just a little pullback, not too big of a deal. All right, let's go. We'll go over to our watch list here today. Got something a little bit different I'm going to share with you. I hope you think it's different. I'm going to go kind of quick through this. Are you ready? We've got the watch. It's okay. We're working here today. This is good. We're looking for interesting stocks today, and I want to kind of analyze and define in front of you why we've determined these are interesting stocks. They're not interesting. I'm not telling you to buy them or sell them or anything. I'm just going to show you kind of how you can review different stocks. Every one of them will have a little something different, some more and some less, so let's dive into it. Here we go. All right, as you're scanning through stocks, I want to point out a couple things that seem interesting. SLG, right? So this is going to be a REIT. When you're looking at SLG there, it is the fourth best performing REIT in the category there over the last month, up 33%. You can see it's basically right there because of that Monday pop that we had there. Ranks in the top 10 for dividends, 5.87%. It's going to be a little bit higher today after the pullback. It's middle of the road valuation-wise when you compare it to its peers, but what I like about this, after adding all that in there, you've got the gap up from that Monday there, It pulled back quickly and started to rally. Then yesterday, zoom in, you got a nice reversal bar, and for now that is holding. That's a way to sort of identify momentum that is continuing in this stock, hopefully in the sector as well, but that is SLG, and why that one is interesting. How can you not be interested in FANG? Diamondback Energy. FANG is a ticker symbol. It's one of the energy stocks that investors are clearly piling into. That's not my opinion. We've modeled that for you. We've shown that in the past couple days and last week as well. It's recovered 1/3 of its year-to-date losses just in the last month. Okay, that's got to get a little check there for that one there. Not too bad. Earnings growth next year expected to be about 30%, which is good for them. They need that. And it's got a 4% yield at the moment. It's not the highest, but they're paying it. So you give that one a break. Also, you can tell the volume, the activity, the break of this downtrend in here. You can tell people are interested in buying this stock. You hope that that continues. At least has to go on a watch list. FMC breaking out. That was very easy. Fourth best performer in this agriculture space there this year. It's up 7% just in the last month. You can kind of see it there. If you just want to look over just real quick to kind of tell that there. And the most interesting thing about this one, I think, is it's breaking out. It's a breakout stock. Notice it didn't pull back too much today. They lost 1/3%. The market's mostly pulled back. Why do you think that is? If everything else kind of sold off, don't you think that stocks that aren't selling off are more interesting today? Bam, I like that, FMC. Let's go over to Salesforce.com there. Salesforce breaking a downtrend here. It's a little bit harder to see. We'll just kind of go like this. We've got the earnings gap over here. Very impressive. We own this stock, so we're, of course, happy to see where it's at. But you've got this break of the downtrend. If it will let me click on it. There you go. All right, so from a technical standpoint, this is what you got. Break of a downtrend over the last couple days, but also higher lows, right? So you've got a low down in here. All of a sudden, it can't sell off and make a new low there. I thought that was interesting there. Something you want to take a look at. Also not affected by the virus as much. It's a new Dow addition there. It's currently the 3rd largest Dow stock in terms of weighting in the Dow due to its price there. And it's up 57% after right here, putting in that higher low. So just a unique way to kind of analyze Salesforce.com. PVH, I wanted to bring this one in because we talked about this one a couple times already. It's got with the between the earnings and the retail stocks that we did. It's a recent breakout on momentum. So it's sort of similar to Salesforce where we were just got this little, is it going to be in a downtrend? Is it going to be in a downtrend? Oh, nope. It breaks out on that Monday pop and is held. It pulled back a little and very quickly took back off again. That's how you can tell that even on down days like today, people are still interested in chasing that momentum. Personally, I think this would be one that would be nice to buy on a pullback, so it's not like a today type, chase after it kind of stock, but we'll see what happens. All right, you got Kansas City Southern. This one's got a lot going on here. You got to pay attention to this one if you're interested. Rails, they've led the way. Remember we talked about Norfolk Southern, Kansas City, CSX, and the others that had been leading the way. Kansas City Southern looks like it hasn't done a whole lot, and that's because there was a buyout. The buyout was from, God, I forget who it was from. I'm just trying to look through anything I can find. Blackstone, maybe? It's going to kill me. They rejected it, right? They rejected it anyways. I can't remember who. Someone will tell me. All right, so this stock in the meantime rejects like the ridiculous $20 billion. It was $208 a share, so whatever that comes out to. Company offers $208 a share. KSU says, no, that's like 12% higher for our shareholders. We don't like that. We're going to reject that offer. So there's the potential for an updated or revised offer should the stock do well, better than $208 a share. They also increased their dividend. They're doing another $3 billion in share buybacks there. And the stock is holding up pretty much at these highs. You've got news risk in there, of course. You've got the potential for takeover risk and everything, but kind of interesting if you're looking for some activity there. All right, and lastly, we've got Principal. This is Principal Financial Group. Recent break of the downtrend. So it's the kind of same thing. You can see it. I won't draw this one. See if you can see it there. Break of a downtrend back above all the powerful moving averages that everybody likes to look at. And the most interesting thing here is it has room to run to highs. So we always talk about like when's the time to buy a stock, but after you buy the stock, you want to ask yourself, what's a likely target? Where's the thing going to go before I should probably take some of my profits? Well, you could imagine technical traders saying, okay, if it pulled back a little bit, we get into this 46, 45 area, and then it's a midterm type trade, but where's the next resistance or known selling area? It's right around here, 55 bucks. So you got a decent risk to reward there, potentially a decent risk to reward, and I think that's interesting for people that are looking to get into this sector, in particular this industry there. So that's our watch list for the day. Just wanted to kind of cover some things that jump out, why they jumped out, and give you an idea of what to look for going forward. All right, we'll take a look at the stocks in the news today. What do we got? Hey, Apple's in the news. Did you see that? If you're a small company and you're putting an app on the App Store, they hear your cries. They've lowered their commission to 15%, it appears, right? 15% for small businesses. You've got to make under $1 million, and then you get that discount. All the rest of you got to pay more. That's how it goes. Boeing, we talked about that already. 737 MAX cleared to get back in the air. They've got work to do. It's not going in the air tomorrow, so keep that in mind. Not only that, is there demand for it anymore? I mean, airlines are kind of parked because, but that's that. Lowe's, you got earnings here. They missed by 2 cents there, just a little bit. No effort to raise guidance or anything. So you got a little bit of a sell-off there today, 8%, which dragged on Home Depot. Not too bad. Could this be the moment that rotation takes place back to Home Depot? Usually Home Depot is the leader. On a year-to-year basis, it leads the way. Lowe's has been leaving them behind this year. Could this be that move back to Home Depot? That's interesting. I think that's an interesting one there. NEO. You got analysts all over the place. Just like there's so many different price target changes because this stock is moving so fast there. It's really interesting. Earnings better than expected. They raised guidance. Lots of positive things to say going forward that they had to say. I'm not saying it. And stock continues to just be sitting up there in the 45s. Very impressive chart if you're looking at that. You got Target breaking out to new highs, but did succumb to a little bit of market pressure at the end of the day there. Beat by $1.28 on earnings. Same store sales up 10%. 9.9 if you're pinching pennies there, but holy cow, Target continues to kill it there. They are one of the dividend aristocrats and continue to raise their dividends as they have, so nice move. That's a nice move for them. A couple other things I'll point out, and then we'll talk questions, see what we can do. Beyond Meat's up 3% on the day. That's going to be because they now have a plant-based minced pork offered in China. There you go. I don't know if it's exciting. I don't know what that is there. Norwegian Cruise Lines. Were they down today? Down 7%. They're offering another 40 million shares, $20.80. So they're diluting their shares even more to raise more money there. I think Carnival said they're delaying cruises till January. You've got Delta Airlines says middle seat's not going to be open until March now. It was January, changed it to March. And I've said enough. Let's see if I can help. Let's see what I can do there. I love it. So Harry makes me laugh out loud. Why buy NEO when you can buy Tesla at these prices? I love that. Yeah, I love your comments, Harry. I love it. Well, so you got to go. George is saying what Canada said. Keep in mind what's reported today. That's the U.S., right? I think somewhere overseas they said the max is good to go. Not Canada. And certainly not other countries. So that's just the U.S. When I say FAA, that's just the U.S. here. Yep. Oh, yeah. Oh, Blackstone. Thank you so much. I remember. That was Blackstone. I was thinking Bain Capital, but Bain Capital bought Virgin Australia. So that was stuck in my head. So I wanted to say Bain Capital. Yep. I love it. Tapestry. That's been on a good move here lately, this Tapestry. So what you don't want is to buy this... where are we going here? Going to the charts. What you don't want to is assume that this is the breakout point, right? Think about what Tapestry would have done. This stock is running straight up a hill. It's getting steeper and steeper. It's getting tired. Running up a hill, you're going to get real tired there. When you hit this area here, think of that more as a target rather than a breakout. What you hope happens if you're looking to buy it is you hope that it gets up here and really doesn't pull back. That it just kind of goes sideways for a while and almost becomes boring so that it can build up that steam and that energy, get more people interested. Then when it breaks out, maybe that's what you want to look at there. Just analysis there. Yeah. About time you got a haircut. It's about time you called me Dustin. Thank you. Appreciate that.
Did you just get a haircut?
I just did get a haircut, yeah. Yeah. My lady's awesome, by the way. You want to have like a good time conversation? You never know where it's going to go. That's what I love about this place. Every time is different. Local shop, by let's support your local businesses. Any idea where you think Baba's going? Or is just a normal correction? You got a few buyers today, but it seems like, yeah. I mean, obviously you have a nice pullback there from the highs. If you're looking at it, that's a 20% pullback. You got a little correction. You can't see it. There you go. So from these highs down here, you hit the 20% mark almost perfectly. So that's likely why you see a little of that algorithm buying in there, a little interest in that discount to buy a correction. I think you've pretty much found the general tight little area where this is going to bottom out and start trying to attract new buyers there. It's a great pullback. Yep. When am I investing in a Floby? We tried to buy one, right? Yeah. Tell them. We tried to buy one. We decided we were going to do it during the virus there. We were going to get it, make a video out of it, and you could not buy a Floby. They were out of stock everywhere. I mean, you could buy them on eBay for like $400, but the company that sold them, they were trying to rush to make new ones and everything. They still make them, by the way, and we couldn't get them. Otherwise, that was going to be, we were going to do it. If anybody wants to send a Floby, do we know if you're not doing it anyways? No. Right? He didn't want to do it. No, it was just going to be me. I love it. Yeah. I love it. I love it. All right. I'm going to call that a day. Yep, we're going to wrap it up there. I do appreciate you watching here today. Oh, Wingstop, $5. Dividend coming out there. If you own Wingstop, Whirlpool, $1.25, Hershey's, 80 cents. And tons of earnings tomorrow. Smaller companies, HP, Intuit, Ross, Williams-Sonoma, and Workday will largely be the ones that get the attention if you are paying attention, and I hope you are. Thank you so much for paying attention to us. Have a great rest of your day. Thanks for hitting the subscribe button, all that good stuff. I love it. Enjoy.